I believe 1 million is extremely bearish. Sure, today Bitcoin is about a $2 trillion US dollar market cap. Hundreds of billions of dollars have gone into it, and now we're about to see trillions of dollars come into it. The size and speed of the move is much bigger, so you haven't missed anything. It's just getting started. Now, at this point, we can see this total store value assets. You can see Bitcoin down here on the bottom right, sitting today at about 2 trillion, and it's still just a little blip on the road right here, a drop in the bucket. Now, how much bigger is it going to get? Well, I got a bunch more charts to show you, so don't worry. But really, right now, this is the frenzy. This is the institutional phase. We can see that right now today, about 60 companies have already started adopting Bitcoin on their balance sheet, and this is happening every day. We see new announcements of this happening. This chart, the big chart here, shows the real institutional adoption. We have MicroStrategy adding about $1 billion a week. I just saw before I went on stage, Riot just added about $500 million of debt to buy Bitcoin. We have Marathon doing $1 billion. And right now, this is showing us that about 13.5% of all Bitcoin is now being held by institutions. Of course it is. Bitcoin was always coming for everybody, and this is part of the second stage. Now, it's not just institutions, it's also sovereign adoption. We have sovereign FOMO. We have, of course, El Salvador, sort of with this first mover advantage. Brazil, just introducing bills to build a strategic reserve. Of course, the United States has their Bitcoin bill going through. Now, per Polymarket, I looked earlier today, it's about a 25% chance of going through. I think that's way too low. I think it's going to be much higher. Now, history shows us what happens when sovereigns start competing. History shows us a lot of things. So, for example, in the 1800s, the entire world decided to go to a gold standard. Some parts of the world, like China, didn't want the gold standard. They had silver. They wanted to stay with silver, and they lost their position as a world leader. We saw the 1950s, the race for space. We saw the race for nuclear weapons. When nations start competing, things really take off. So we have a precedent for where this is going. But why? Why are the institutions FOMOing in, racing into a new asset? Well, because they see what we all should see. They see that there is no end to the monetary debasement that's coming. And they're all looking for a way to protect themselves. What we have right here is that we can see the bottom right is the U.S. Federal Reserve's balance sheet, which has been expanding by 13% a year over the last 4 years. We can see the money supply has been averaging over 8.5% over the last 4 years, and there's no end in sight. How do we know there's no end in sight? Well, besides the fact that they're in a debt-based monetary system that always has to grow, the government actually tells us that. We can look at the CBO, Congressional Budget Office, and we can see that they are projecting through 2054, the next 30 years for us. And they show us that the deficit spending is going to get bigger and bigger and bigger. They show us that the debt levels are going to go up like a hockey stick. And they also show us that population growth on the top right is going to plummet as the GDP goes down at the same time. Population growth going down, GDP going down, means debt levels go up. Now, they also show us the budget through 2054, 30 years from now, and there's no recession in sight. They don't expect any dip in the revenue coming in. So, where does all this come from? Money printing. Now, of course, this is what they tell us for the next 30 years. When you look at the population decline and the GDP decline, I think this is way understated. But for the purpose of what we're doing, we're going to use these numbers and project it out into the future. So in this phase from 2020 to 2030, using the numbers that we have from the last 4 to 5 years, we can project out the money supply growth at 8%, continuing, bonds going up 5%, real estate and equities, which are basically perfect proxies for monetary debasement, going up at 8%. Bitcoin maybe averaging, finishing the decade at about a 53%. We're at about 60% right now. That would put Bitcoin at a 21 trillion market cap. $1 million per Bitcoin in the next 5 years, or a 10x from right here. Now, this may sound like a big number, but if we look at it, Bitcoin is only capturing 1.5% of total store value assets at the point. Now, if it was able to get 5%, which might be way more reasonable, that puts Bitcoin at a $3 million price per Bitcoin. So I believe 1 million is extremely bearish. and not bullish at all. Now let's just keep going. If we look at it as a percentage of store of value assets, just so you can visually see it a little bit better, you can see maybe it's overtaken, it's flipped gold by this time. Now it's one point that I want to bring out right here real quickly, is a lot of people think that for Bitcoin to be worth 1 million or 5 million or 20 million, well, the dollar's worthless, right? At that point, the dollar doesn't buy anything. No, that's absolutely not right. You see, Bitcoin is disrupting other assets. I have a venture fund called the Bitcoin Opportunity Fund. As a venture investor, we look at a disruptive technology, we look at the size of the markets it's disrupting, and then we speculate as to what percentage we think we could take from those other markets. So Bitcoin is taking from bonds, it's taking from real estate, it's taking from equities. The dollar doesn't have to die. Sure, gas goes from $4 to $8. It doesn't mean it goes to zero. Now, is that realistic to get 1%? Well, we can look at other disruptive technologies like Uber or Airbnb. Both of them were able to capture 10% of their market in less than 10 years. 1.5% is extremely conservative.